Hey everybody, Andy Moss here, tradingadventures.com with the market update on Tuesday, May the 12th. And it's been a minute since we've gone through all of the market charts together. So let's take a run through and get a little bit in depth here as far as the number of charts and that kind of thing. First thing we noticed today is the SPY dipped almost all the way down to the rising 8-day this morning. A little bit of a sell-off after the open and recovered quite nicely. Not quite a green day, down about 0.15% on the day, but a green candle and holding up there pretty well as we see that the buyers will not be scared off easily. Similar action in the Qs, closing a little above the, or a little below the open, excuse me. But likewise, almost coming down to the very steeply rising 8-day moving average. Notice the difference here on both of these charts. The distance between the 8 and 21 still very wide, both still very sharply higher, and a little bit of a moderation here in the RSI today. And it is printing a DeMark 9 setup, which actually showed up a little early on the index futures. That came in, let me make sure this is right here. Yeah, it came in yesterday on the S&P and NASDAQ futures. So not a big deal. Sometimes those are different due to the more trading hours of the futures versus the index. But getting back to our charts here, the point is that coincides nicely with just a little bit of a break here. It doesn't mean we get follow through to the downside tomorrow. It's just a mathematical count that shows up every now and again, and when it does, we like to take note of it as one piece of the puzzle. The Dow has not yet made new highs, but it is above this shaded area of price history that we've been watching for some time and holding it pretty well. Dipped below the 8-day, down near the 21-day. So we see there the relative strength is in favor of the SPYs and Qs right now. And Dow 30 lagging behind just slightly, but still in a solid uptrend there. And similar situation with the small caps. They are a little more squirrely, as they almost always are. Looking at Bitcoin, this is a situation we've been watching a bit here as it tries to navigate and negotiate this anchored volume weighted average price from the high back in October of last year. Also got the declining 200-day moving average as a reference point there. So Bitcoin is improving, but it's got a legitimate test here that it's been working on for 6 or 7 days now. And that would be the next thing that the bulls want to see, is a move beyond both of these levels that can hold and stay there. It's holding this area pretty well so far. This is a area of price history we've pointed out a couple of times now. There's a recent low back here, a little bit of supply here on this trip lower, and couldn't get back above it on the first few attempts. And now it's holding it well so far. So that looks a little better for Bitcoin. And while we're at it, let's go ahead and look at some of the other cryptocurrencies in here. The Ethereum, kind of a long consolidation pattern here, and a similar, I won't draw it in, but you can see the supply that has come in around this level, call it 2,400 plus or minus, quite a few number of times there on Ethereum. And Solana looks better, had a nice little pop here for a week or so and hit this similar supply level. Just take this old retracement off of there. And so some tests showing up for the cryptocurrency space. They might still get above. That's what we want to watch for next, is the acceptance above this level with price action moving beyond it. Dollar, not doing a whole lot, still in this choppy consolidation here around $98, and volatility gets a little bit of a bounce here the last couple of days, but not running away. Moving overseas, the all cap world ex US had a breakout above this level here that has come back below that now. So we could look at a potential island or a confirmed island top reversal pattern up here. Once again, doesn't mean it's going to crash and go all the way down into this area, but just to pull back below this level, what we want to see is that a problem on the way up in days ahead? Or can the 21-day provide support and keep the trend moving upward? China specifically, bit of a messy trend area in here. This is not a very clean trend line, but it's had a couple of tests in this area that were unable to pass, and now it's trying to maybe probe that level again. It is above the 8 and 21 day, and probably a better measure or visual reference there would to be look at something like this, which is actually kind of similar to the Bitcoin charts, crypto charts we just looked at. We had a recent low over here, and that was back in, what is that, December of last year. A gap down below that, a test that failed, and now we're trying again. So that's what the Chinese markets need to do as far as FXI, is get above this 3750 to 3770 area, and then maybe it can go up and test this slightly declining 200-day moving average. Bonds have been the topic of some conversation lately as prices come down and away from these declining moving averages. Looks like bearish action there on the price of bonds. And what really has been the topic of conversation is, what does that mean for rates? Rates are moving up on the 30-year treasuries and the 10-year treasuries. What impact that has on stocks seems to be very little, of course, at this point. But if it gets on beyond this, that's what folks are speculating about, is will that dampen this rally some? And that's, of course, something else we'll have to wait and see, but probably worth monitoring there if you're an interest rate follower. High yield bonds continue to chop around and decline here below a declining 50-day moving average. Below all the moving averages, with the 200-day flattening out there. So high yield on the daily time frame, not trading as strong as stocks, which is something we watch a lot. High yield generally is a more risk-on asset that trades more similar to the stock market, not doing that lately. Commodities continue to be very strong. Of course, the GSG is very heavily oil weighted. So looking at the crude oil futures prices, after a long back and forth session here, they're trying to go higher again, and we see a lower high and a higher low as the price action continues to tighten, which is what we've been watching for. After these wild moves and huge ranges, it's only natural for that price action to kind of tighten up a little bit there for oil. As of today, it's back above all the moving averages. And what we'll watch for is, can it go up and test this level and get beyond, or do we see yet another cycle of lower highs and higher lows before it finds a more directional resolution? Gold, also a choppy consolidation here, mostly in between these two Fibonacci retracement levels that we've been watching for quite a few weeks or months now, and right back in the middle. Just a very congested chart here. Got too many things on here, but you see the moving averages all coming together, some rising, some declining. It's going to be hard for gold to do much unless it gets and stays above this level or below this level. Silver, though, looks much stronger. It has moved away from this cluster of moving averages over this anchored VWAP from the highs and into some new territory here as the RSI comes up and firmly in the bullish upper half of the range, but not yet in an overheated situation. This chart of the equal weighted S&P, if you saw my articles in the CMT Association newsletter last week, I covered this one pretty in depth. This is the again, the equal weight S&P 500, showing that the smaller stocks aren't participating as well as the large cap stocks. So that's not abnormal. It's not necessarily a symptom of any ills or poor price action or anything like that. It's just, again, another piece of the puzzle, and one thing that I think would, as the large cap focused indices, the cap weighted indices, moderate a little bit as they did today, if that would to continue, if we see that buying power rotate to some of these somewhat lagging areas of the market, that would be an element of strength showing that the buyers are not going away. They're simply focusing in different areas for the time being. So I'll put a link to that article in the description down below, and lots of information there last week. If you didn't get a chance to follow that, I do think it's worth going back and revisiting. So here is the growth section of the Russell 1000, very strong, and the value also very strong. So that shows there's pretty good participation across both of those sectors. Consumer discretionary holding up pretty well, but could not make a new high here. It went back and tested this level, and now it's back down and below the rising 21-day average. So maybe a little bit of early weakness or taking a break there in the discretionary sector, while the staples continue to hold up very well. So no signal there yet as far as I'm concerned. That's something we want to pay more attention to in the weekly time frames, but potentially an early indication there of a very little bit of risk off type thinking. I won't say positioning yet, because again, the relationship really hasn't moved. But that's something, if you view and review the weekly chart analysis when those are available, that's a risk on, risk off measure that we look at quite often. Excuse me, this is the growth versus value relationship, just demonstrating those two relative to each other. And this is the growth versus value, not moving around much, but making some progress back towards another leg up for growth potentially. This is consumer discretionary versus consumer staples, and we see the staples there trying to take the lead or a little bit of strength away from the discretionaries. The high beta versus low volatility, this is SPHB versus SPLV, still very much in an uptrend and pointing towards the high beta, the more risk on appetite there for the buyers. So let's get past all of that now and look at some individual sectors. Semiconductors, obviously a huge leader in this recent run. This is just an incredible move here from this low back on March 31st, up as much as more than 73% there on that overall move, and a little bit of moderation today. No breakdown, just a slight rest. Biotech holding up well, not yet to new highs, but right here in the area of the 8 to 21 day. So you just see the strength all across the market in a lot of these sectors that we're looking at. IGV, even the software sector, is getting better. Mag 7 has been a leading sector there with the semiconductors. Obviously, we've got NVIDIA lumped into that group. And one that has not been a leader is the financials. We cannot get above this slightly declining 200-day moving average, and now back below, or for several days now, back below the 8 and 21 day, back below this anchored VWAP from the highs, and financials just have not been participating in this strong upward move in the overall market. So that's another very slight potential red flag there. Energy stocks look a little stuck in here. Rising 50-day, flat or slightly rising 21-day, and just not a lot of participation there in energy either. So Apple, while the market was down most of the day today, Apple was pretty strong. I'll go ahead and show you an intraday chart here. Even as the market sold off, this is what above the daily VWAP pretty much all day. A few little tests and probes here below, but it actually finished very strong near the highs. Look at that relative to the overall market chart. And this was the sell-off we saw this morning that got a little bit of a double bottom here before gathering strength and getting back into this gap at the close. So Apple showing good relative strength on a daily basis today, but if you consider those charts on the daily time frame, it looks very strong there too. So going up, making new highs, and like we saw in a couple of the indices, but the Mark 9 setup printing here today, and even if that's not on there, this has just been an incredible run with RSI a little overheated. Would not be surprising to see Apple take a little bit of a break and come back down into maybe 288 to 286 area. Amazon backing off here for the last several days. Again, no red flags, just a normal pullback after a relentless strong move higher. Google, another one very strong and now pulling back a little bit. Meta, not able to participate in this upside move. It's still stuck. This gap down here on earnings, the results led to selling, and it cannot get back over the declining 8-day moving average there. Microsoft made some nice progress, and now it's struggling a little once again. Earnings moved downward on that one as well, and it's holding pretty well in here, but it really needs to get back above this level and then continue to check the boxes on these potential tests on the way higher if Microsoft is going to continue to improve. NVIDIA, new highs day after day after day, and holding very well there, as we saw with the whole semiconductor index. And then finally, Tesla, inside day here, a DeMark 9 sell set up, a little bit of a correction on the RSI, and once again, totally reasonable consolidation here after such a strong move, finally getting out of this area after earnings and back over a rising 200-day moving average. So there's your snapshot of the market indices and some of the individual sectors and names there that we've been watching, or that most people watch, to gauge the overall lay of the land. And what we want to see next, the system or the process doesn't change. The daily charts all look very strong, as we just saw. We've got a little bit of pullback in some areas, totally normal, totally expected after such a strong move. And if we're going to see further downside, the first thing we would have to notice is a move that gets and stays below the rising 5-day moving averages. This is the roadmap chart. We've got the SPYs, the Qs, the Russell, and the Dow. And notice the Russell is already below a now slightly declining 5-day moving average. So weakness showing up more there than the other three indices. That's worth monitoring. If you have long positions, you're raising your stops, maybe reducing risk a bit. But on the large cap indices, this slight move down here today was just enough to reset things for buyers to come back in and close it strongly. It's back above the rising 5-day, back above the week-to-date anchor on both of the SPYs and the Qs. Actually, Qs closing right here at that week-to-date anchor. So a bit of consolidation after this move is not alarming. It's not surprising, and it doesn't mean that we are going to give back anything big yet. If that is to happen, that is what you want to be watching from here, is how do we act first around these 5-day moving averages. So there's your brief market update across lots of different charts and markets and sectors. We'll see what happens next as we wind down earnings season and price action starts to moderate.